All right, it is Friday, the 28th of April, 2023, and we have had quite a bit of data out of Europe already this morning. French, Spanish, Italian, German GDPs and CPIs coming through. A bit of a mixed bag, broadly positive out of all of the constituents, bar Germany with GDP coming in a miss on the year-on-year, 0.2, miss on 0.8, prior 0.2. And the quarter-on-quarter miss, negative 0.1 on expectation 0.3, prior 0.8. So we're just 12 minutes off getting the Eurozone composite GDP for year-on-year and quarter-on-quarter. It'll be interesting to see what the mix comes out at on the numbers. But really, as we look through to the US session, we have the all-important core PCE price index month on month, year on year set to come out 4.5%, just a shade below prior 4.6, and the month on month set to come out 0.3, in line with the prior. PCE price index as well, so the headline and the core, and then personal spending as well. And then we're going to get at 3 o'clock Michigan consumer sentiment. So, but broadly, you saw really, really strong rallies in equities yesterday as we look at these charts here. So, starting off with the S&P 500, you're seeing, well, at the moment, we're just going to actually range pattern on the ladder there. Hold on a second. The coloration isn't quite good. I'll just try and reload this. Okay, there we go. All right, so essentially really good strong buying out of that 4080s on SPOOs yesterday, and that level was very hard to buy unless you were APAC, but we're seeing the low of this area 4080s, and we just rallied all the way across, and then all the way across the next area into an extremely positive and strong close there, just punching out a new high on the session in the last couple of minutes there yesterday. But just taking back a little bit this morning in equities, I think we could easily pull back to find the 4120s area for some support maybe on this one. But for me, it seems like the animal spirits are alive. So 4118s, we've been talking about this level a lot over the last couple of weeks, and that's where I see we could reverse down onto for the longs. Does it want to pull all the way back to maybe somewhere? Well, no, I think I like 4018s. Generally, that's what I would like on equities here. Looking at the DAX, as you can see, we are getting absolutely barbecued here on the DAX, which is kind of just doing its own thing here. But broadly speaking, well, we've got that negative German GDP coming through this morning, and the 16012s, really nice area to lean against for the shorts on a pop high. I took it out too early here, and now I'm wishing I was still in that trade, but we're short oil here at this desk. So look, I think let's look towards the Nasdaq. Really strong performance there. So we're just going to get this prelim data coming for GDP in 10 minutes here, so I'll wrap this up shortly. But yeah, Nasdaq, I think a pullback onto the 13079s. There's a bit of a trend that we broke out above as well, just a shade below that 079s. Could be good for support. And we broke out from this area yesterday. The 12 was it? I mean, it's quite a busy area there. I'll actually just tighten that up, and we'll do that. So around the 996s was the breakout area. I don't think we need to trade back there today. Seeing oil now, this is absolutely wonderful. Anyway, look, equities, I think just need to pull back a wee bit and then find the buyers again, and then we can get tally ho for further upside. And I know Jason Shapiro is going to be loving this. He's long SPOOs and Nasdaq, or maybe he's not still in the Nasdaq. We might have to get him on for a chat. And the bonds. Well, when the GDP comes in terrible, you got to be buyer on these bonds, right? And let's just look at the bonds on a daily. Here we are on the bonds. We were looking at buyers really wanting to soak up some contracts around the 133 spot 35s here, and they are getting paid out this morning. But this whole area here is fraught with danger for the bond. So I'm taking a little short here. I think it's gotten a little bit out in front of its skis here. We're about to get the consolidated EU data as well, but I think generally, I think we probably will finish much higher here on bonds today, especially if we start pulling back aggressively from the buying that we saw yesterday on these equities markets. Now, oil. Right, we were alerting the guys in the room. We were talking about this earlier. I said it could get quite aggressive here to the downside. And really, what we're talking about is essentially on the daily bar, right? Here's the gap, right? I mean, actually, the gap is higher today, right? Here's the gap, right? And essentially, we've kind of pulled back against that gap, and this trend, this what do they call this? Pennant trend, the bottom of the pennant, and we've rejected, right? So we've broken out. We pulled back yesterday. We've tested that pullback again today, very early. About 5:30 was the last opportunity you get to sell around here. And I think we can go to 72.67. I think there's going to be a little bit of buying at 73.89s here, but I think we're going down, guys, on oil. And 72.67s I think could just be the half of it. I think we could actually probably even do 71.92s. And actually, if it gets really nasty the way it did there a couple of days ago, we could be trading 70 whole handle today. 70 whole handle. You heard it here first. Don't shoot the messenger. I'm just telling you what's happening here, guys, and where things are at. That's all. All right. Bonds as well. Look, yeah, I mean, the strongest case here is well, on T-note, really finding the supports in this area around 114.21s to 26s. And, we're up here, and I think we can continue to print higher on bonds, which is not going to suit a lot of these banks who've been re-upping on their risk sort of profiles, for putting depositors' money. So if these bonds want to, I think, yeah, I don't think these bonds can go much lower, because it's just going to screw up the SIBs, the systematically important banks, and their risk profile for depositors, right? Because then if the yields get higher and higher and higher, well, they're going to have to basically sell a whole tranche of bonds at a discount and then rebuy at the better coupon rate. All right. But now the Fed and the FDIC are allowing them to mark their bonds at market, right? Sorry, not at market, at par value, which means these banks kind of can't lose money any which way in terms of their risk profile is pretty much on deposits is pretty much neutralized by the Fed. And that to me is kind of like, that's quite a big form of quantitative easing, actually. Anyway, that's another conversation. All right. This has been a pre-US. Gold as well. Look, it just ain't what it used to be. I think we will end up going at 2,500 this year, but it's just, tell me where I'm going to buy to take the least heat on that trade. I don't know. All right, guys, that's it. That's another pre-US session. Thanks for tuning in. And yeah, we'll talk to you later. Cheers.